Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for November the 30th, 2010. Now our first position for tonight, or for tomorrow depending on when you're viewing this, will be the sugar number 11 contracts, the March futures contracts. Now you can see that this line, we've had this dramatic sell-off, which was inevitable. Obviously at the rate that sugar was moving up, we can see it turning down. Now, what I want to point out here is that we appear to be basing out around this 25.80 area, and this was the same level at the height of this sell-off. We can see these two long candles that have come all the way down. It's hit. I've drawn a line there. The next day we hit the exact same area. The next day a little higher, but then we have several points just above, just below, excuse me, the $26 level. So we're sitting at about 25.87 now. Going into our actual contracts, and looking at our crossovers, what I want to point out here is we have the short-term crossover is moving to the upside. We can see this here, which is a good sign, and the medium-term crossover is also just crossing over. Now the long-term is still showing down, as is the triple EMA. Now looking at the triple EMA crossover, we're going to bring that up here so everybody can see. Now it's had the sugar contracts, usually when you have that kind of a sell-off, you're looking for it to continue, not necessarily base out. So we can see here that the 3-day predicted moving average is moving back up, looking to cross over the 8-day and the 18-day predicted moving average. The medium-term predicted difference, we can see this right here, is moved up above the zero line. The predicted long-term difference is also pointing up and moving back towards that zero line. Now I have the predicted RSI up here. We'll switch that out for a MACD, but right now we can see that this is pretty much a trend ready level. We've come off this overbought territory. We're right a critical indicator here for me on these contracts, excuse me, is that our trigger is coming down and now running flat along the zero line, not wanting to push below that zero line. That of course is very important. Now I've switched this over to the MACD. We can see I've got the MACD. The trigger has gone down below the zero line, but it's now coming back up and meeting the trigger just above the zero line, getting ready to cross back up. So there's a number of indicators here for me that are saying that sugar is actually potentially getting ready to make another run at this $32 level. So let's have a look at our predicted high and predicted low for tomorrow. First of all, I want to point out three critical levels: 2803, 2786, and 2819. Very important to point out also, 2835 was the close. The market is closed above all three of the Vantage Point predicted moving averages, which in itself is a bullish signal here for these sugar contracts, these March contracts. So now that we've looked at all that, we've got our key levels. We're going to go in, have a look at the daily report for tomorrow, and try and fine-tune our entry point. Now again, it's been sugar has been volatile, but it's not as volatile as of late. It looks like we're basing here. Now for tomorrow, we can see our neural index is again to the top. We're to the top side, to the upside. Our high 2867, our low is 2783. So 2783 is our predicted low for tomorrow. We want to take that 2783 and line it up against these predicted moving averages. In my respectful opinion, 2803 is the entry point you want. I don't think it's going to get to 2783. Not that the Vantage Point predicted low of the day is inaccurate. It's these predicted moving averages are all stacked up, and I believe will not allow sugar to get down to that predicted low. It will essentially block it. So the 2803 is the entry point for tomorrow, and we're going to be looking for a move pretty much back towards the probably just shy of $29, or we should hit tomorrow. So that's our first position. Again, we're going to be looking for about $1 plus move on the sugar contracts, and of course all stops would be below the 25.50 is where I would have the stops on that particular trade. Now for our second position, we're going to go back into the foreign exchange market. Now our second position here, we're going to be looking at the Australia-Canadian currency pair in the spot Forex market. Now with this trade, this is a trade that we've been in for a little bit here. It's progressing. We've come down. You can see that I have this channel drawn in here at this 99.25 area. That represented a very big area for the Australia Canadian dollar. My view is that this pair is really overvalued, and we should be looking for a much bigger move to the downside on this, potentially back into towards the 87, 89 to 90 area. But for now, we can only take it day by day. But the key thing I want to point out here, Vantage Point's call right here with these predicted moving averages stacked on top of each other. It was a complete failure at this level. The 3-day, the 8-day, and the 18-day predicted moving average all breaking lower. We've then broke this bottom of this support level that I've drawn in here at 99.25, and sure enough, we've extended down to a close today of the 98.03 level. So now this brings us to our trade for tomorrow. What are we looking at to get back into this trade? Is everything still look good? The predicted medium and long-term differences are sitting at about 90 to 100. Definitely not oversold. Trend ready. We have room to extend lower. Predicted MACD, we can see that it's crossed the trigger back up here. It continues to move lower, and it's now pushing below that zero line. Very important. Predicted true strength indicator, we can see it ran flat. It tried to cross the trigger to the upside, failed, and it's moving lower also. And again, it's just moving below that zero line. So we should see this week a move on the Australia CAD pair down towards that, at least the 97 level is what I would shoot for. But for tomorrow, we're looking for a slight retracement to reset our long position. So key levels I want to point out here: 98.47, which will be our entry point for tomorrow, 99.19, and 99.73. All stops we want above the 99.73 level. We do not want to get caught up in this intraday nonsense here in the Forex market. We want to make sure we stay out of this far enough that we allow this trade to develop. Our analysis appears to be quite good. So with that said, a 30 or 40 or 50 point stop loss would simply be redundant. You would just essentially, in my view, you would be asking to be stopped out. So we do not want to do that. Our entry point, 98.47. I've already decided that, but I'm going to go into the daily report from Vantage Point and just see if it agrees. Now you can see that I'm using those predicted moving averages. We have a fresh, strong trend, so I'm using the 3-day predicted moving average. Now our predicted high for tomorrow, 98.52, so that coincides with what I'm looking for. Our low, 97.57, so everything is lining up here. So we're looking anywhere on any approach of that 3-day predicted moving average. We may not, in a strong trending move here, we may not quite get that, but I think we should at least get to the 98.40 level, and somewhere between 98.40 and 98.50. And then of course I believe the sellers are going to be camped out there, people like myself, waiting for that area to retrace to, so I can get back into a short. So those are the market positions for November the 30th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.